So with that, official welcome to this conversation today with William Lieberman, Kim Petry, and Renee Wong. William Lieberman is coming to us from the CEO's right hand, and then Kim and Renee are his guests. So, essentially, whether you're preparing for your first raise or you're refining your pitch for a new round, this workshop that is really going to go deep on building your investment case as a founder, from the numbers to the narrative, will be helpful. So we'll really help you shape that narrative and make inroads with investors, which is obviously very important to entrepreneurs, which is a big segment of the Fourth Effect ecosystem. Before we dive into that content, I do just want to say a very quick word about the Fourth Effect. I think I might be, okay, good. I think maybe I was being echoed. So just a quick word about the Fourth Effect. For those of you that don't know, I know I recognize many names on this call. Many of you are already inside our community and or you're inside our platform as a premium member. But just in case you are not, we will drop a few links in the chat because we would love to get to know you. So one is Platform Tour. We do these twice a week from 12 p.m. to 1 p.m. Eastern Standard Time. It's really a great way to just get started. So it's kind of live onboarding. Platform Tour will help you start that 30-day trial to get inside and have full access to everything. And what I mean by full access, we have approaching 1,000 pre-seed through Series A startups inside the Fourth Effect that are leveraging our platform, our community, our resources to really build fit-for-purpose advisory boards and governing boards that help them scale and fundraise more effectively. We also have an investment club where those startups can fundraise. So we're kind of a direct and indirect source of capital for scaling companies in a very smart way. And then on the other side, we have thousands of executives who want to take those seats as advisors and directors. Many of them are also accredited investors, so they're interested in writing an angel check or two, and or possibly meeting VCs, because sometimes LP investing is really interesting as well. And that can also be an on-ramp to board service. So, and yes, there's lots of investors in our community too. So if you're listening to this and this sounds interesting to you, please come to a Platform Tour and get started. You can also just come in directly through a trial. One last thing to mention, we do board boot camp every 6 weeks or so. It's a wonderful kind of first introduction to what we are and what we do. The next one's on May 14th. They're 2 hours long. We'll share the link for that as well. It comes with a year of membership. So you can, do the 2-hour course and then get started right away. I think that is all about everything I had to say about me. So now let's get to the point. This is part 2 of a 3-part series. The first part, laying the foundation, preparing your company for investment. We'll also share the recording in the chat for that. And that's available on the platform for members. The third part of this 3-part series is coming up on May 22nd, execution and negotiation, closing the deal. So we'll also share the link for that if you want to sign up and get a jump on it. So for today, we are part 2. And now, after my long-winded introduction, William Lieberman, it is my absolute pleasure to hand the stage over to you to introduce yourself, the CEO's right hand, and your guest collaborators.
Great. Thank you so much, Breen. And it's great to be here again for the second part of our series. As you said, we're going all about how to help raise capital, right? So what do you need to do in order to raise capital successfully and increase the odds that you get a successful raise done, be it through friends and family or institutional investors and anywhere in between. A little bit about us real quick. We have been doing this for about 10 years. So helping small businesses grow and scale. We have a team of CFOs like Kim and Renee, who you'll meet in a second. We focus in on those types of companies that are looking to grow, and how can we help you do that? And how do we help you steer the ship, given our years and years of expertise in a variety of industries and a variety of evolutions in terms of the size and scale of your business. We're based here in New York, but we have team members and clients throughout the US and Canada. And we've done lots of capital raising work across the team. tons of different types of capital from both equity and debt to startup to all the way through IPO, right? So we have people on the team that have seen everything. In terms of who we have, I'll let Renee start in terms of introducing yourself, and then Kim.
Hi, everybody. Very nice to meet you all. And it's my first time joining an event of 40th Effect. So very excited to meet you. Oh, do I have an echo?
You know what? I'm sorry, William, when you're not muted, it echoes. And other people are talking.
Got it.
So I've been in the CFO world since 2012. Started with e-commerce and marketplace. That's my specialty. I joined my first unicorn startup called Fab.com, which taught me a lot and also led me to other startups, which I ended up into joining the crypto space and did my first ICO in Hong Kong back in 2017. And at that point, crypto still has a very bad name. So like a lot of Silk Road, a lot of lost funds and fraud. And I'm so glad that, right now that kind of, that space is getting more and more popularized right these days. I jumped from being an operating CFO to now running a fund that focuses on Web3 investment. And we do typically more pre-seed, seed investment across categories. I also advise on early stage Web2 or more traditional startups. And a lot of them are mostly in the consumer hardware space. So I do see a gamut of different startups, and I hope I can walk you through some of the investment criteria and how a fund and a VC fund looking at evaluating different opportunities.
Great. All right, Kim, real quick.
Hi, my name is Kim Petrie. My background, I started out actually at big companies. So I spent several years at PwC, CFO at US Trust, CFO of corporate card for American Express, and then I was their controller for all their credit cards and small business services globally. So I had a lot of very large corporate jobs. And at about 8-9 years ago, I made a decision. I had kind of gotten tired of doing massive cost reductions and pulling companies apart. And I decided to move more into the startup space. And what that did for me was really show me the love that I have for helping companies grow. So since then, I've been doing everything from seed to sale, working with companies. One of my largest ones was Artifact. They were a crypto company as well, and more in the digital gaming asset space. Sold them for almost $300 million to Nike. And so I really work with businesses from seed to sale. Every business has a different trajectory and a different objective. A lot of my businesses just want to build a business, make some money and grow. Other businesses want to be the next Bill Gates. So I do everything from seed to sale, and I absolutely love the startup space.
So let's get into it. And we're going to start with a poll. And just real quick, want to find out for everybody on the call, where are you on your journey in terms of capital raising? So from idea stage to pre-seed to seed or Series A or beyond. So Mercedes launched that poll. We'll give everybody a few seconds.
We have a few pre-seeds.
All right. Okay.
And
All
then
right,
registration. Some are voting in the chat versus taking the poll, so I can't keep track of the quantifiable amount or numbers. But it seems like it's a good mix between pre-seed and ideation, William.
Okay, perfect. All right, so just to recap what we talked about last time, and again, the recordings on the Fourth Effect site. But the big pieces that we want to really focus in on are making sure that you have your profile of your business investor ready, right? So you spend the time to build the narrative and you have the message, you have the financial model, you are ready to go, right? And there's part of that is that self-assessment in terms of your readiness, right? Do you have your story down? Do you have your pitch down? Do you have the financial information that backs up the story with defensible data so that you know that when you go to market in terms of talking to investors, that you're going to be ready with answers to the hard questions that are coming? And that's taking that business model, translating it into a financial model or financial narrative that backs up that story and that passion, that growth and the growth opportunity that you're presenting to an investor. And that's really important. Another thing that we talked about was what kind of valuation building strategies can you focus in on now? Things like, hey, I want to have a recurring revenue model because that's going to be more valuable than a project-based or non-recurring revenue model. That's an example. And then make sure that you get help along the way. Right. So these are some of the big takeaways that we had in session 1. I noticed in the chat somebody didn't get the deck, so we'll make sure that that deck gets out, Mercedes. And then again, the recording is available. So let's jump right in terms of what investors want to hear. And so part of that is really understanding the audience. Who are you talking to as a prospective investor for your startup or small business? And so I'm going to hand the microphone, and I'll mute myself, but I'm gonna hand the microphone over to Renee, and she's gonna walk us through this. And Renee, just tell me when you want to go next, and I'll forward the deck for you.
Yeah. So right now I'm focusing more from institutional money, where you're pitching to a VC, a venture capital fund. And typically the first step before you go for a meeting or email a fund is actually do your homework. And that's something I always emphasize to a lot of startups, because if not, you'll just spend a lot of time spinning the wheels. First is that you need to make sure that the funds you guys you want to pitch to is actually investing in a company, in the type of companies that you're building. Funds, especially in the Web2 space, they are more and more specialized, whether they want to just focus on consumer or just focus on AI, and also what type of geographic focus they have. So I think doing the research up front is very important to know who to target, which VC to target. Separately, then is also knowing how big a check they will write, and if they will. And there are two main things, right? When I talk to startups, will they invest in a pre-seed, and how big a check they will write. Those two investment criteria you should go in research ahead before going to talk to them in a meeting. Then I think we can talk, and then we can go through the criteria here. The very important part is, as a pre-seed seed company, is to tell them a compelling story about your product. Because there are a lot of times VCs want to make sure that they're investing in a project that has shown product market fit, and also that it has a big enough addressable market. So I think here, in terms of the criteria here, is that, especially for pre-seed stage, is that you have a great concept, but you have some proof that the product is actually solving for a need, solving a problem, and people actually need them. And also separately is that it is a big enough opportunity. And then third, that why you, right? That you have enough experience to bring the project from $10,000 to $1 billion. Then there are other, right? Once we get past that first, like a very compelling story you're telling to the VC, then you go through the VC, go through the other assessment is, what is the exit potential, right? Is there a chance to go public? Or it's like, is chances are will get acquired. And if it's get acquired, who will be some adjacent companies? Is it getting acquired by Meta or Google, or is it getting acquired by Estee Lauder, right? Like, what type of acquisition will we be looking at as an exit? And then they will look at different, like the risk profile and all the competitors in the space. And that is more getting a sense of the greater landscape as to if there is a potential for this project. And then I think I address other ones. It's like the team strength, business model, market opportunity, and that is the market opportunity big enough? And then, but again, I want to always emphasize that the prestige seed stage or seed stage company is to make sure that you can demonstrate that there is a product market fit. Yeah, the next. So yeah, so here, like, just double click on some of the points is to make sure that your thesis that is very compelling. And Andreessen Horowitz always, like, they hold a lot of workshop on how to do a pitch. And one thing that always stuck with me for years when I talk to early stage startup is that make sure it's like you go in and telling a Hollywood story, right? And you are the hero. And then there are all these dangers and all these problems you need to solve. And at the end, why you are the one who can do it and why this is a good thing for the company, for the society, for everybody. And you need to make it very compelling in your first meeting to make an impression to the VCs. The ROI potential is basically looking at what is the exit potential and how big you think the opportunity will be. Yeah, and then the domain expertise, as I mentioned before, is why your team, and then how, like, what is your unique offering in the marketplace. Yeah, the next slide, please. So what do investors want to hear? And what is a compelling, effective narrative? So I always like to see is people coming in to state a problem up front. Like, why do we need your product? What are you solving? And then you present a unique solution or service. And then also, then you should say, the third thing to address is why you, right? Why the team? And how can they bring this potential solution to reality? And then the fourth thing is, how can you scale it? Because VC always needs to see, how is this a 5x opportunity, a 10x opportunity, and when is the time for exit? Is it going to be a short-term exit, or is it going to be a 5 to 7 year exit? So those are the variables you should think through if when practicing your pitch, to be in the shoes of a VC. Yeah. The next step. Yeah. Yeah, so the investment narrative, as I mentioned, you have to present, your product, your company that you're building. I think market timing is one thing also is very interesting, and it is very hard to say. It's hard to control the macroeconomic factors. So and there are always like certain categories is in favor, such as AI is very in favor and hardware is not as much in favor. But I feel like it's impossible to control a lot of macro factors, but always try to find the right people to talk to, I think, is the most important. There are hardware VCs who, no matter what, will invest in hardware, no matter it's a recession or whether there are a lot of tariff situations. And like AI, there are funds, right? Because it's such a hot trend, there are funds that are specifically built to that. So I think to ride out the different ebbs and flows of the market is just finding the right VCs to talk to. Yeah. And then the next slide. And then in terms of tailoring your message to different audiences, there are, besides VC, there are angel investors, as you know, which might be typically will be less demanding in the due diligence. There's also a lot of angel groups out there that at the pre-seed and seed stage, I always encourage companies to go to pitch in front. Even though they might not be 100% fit of these different angel groups, just having the opportunity to practice your pitches in front of investors is always a very good idea. And again, right, for different angel groups, they have specific focus. Some are alumni venture groups. Some are really like hardware focus or certain software focus or consumer focus. So I think before pitching to those groups, always do your research and see how you can cater to the investors that you're talking to.
So Renee,
Mhm.
do you have to go through a certain level? Like, do you have to go to friends and family and then an angel and then a VC, or can you go straight to a VC if you're raising a lot of money? Or how does it, like, how do you know who's the right audience for your business?
Well, I guess you can do it concurrently, but the chances are you will want some practice before talking to a VC. And VC at a very early stage, there are not that many VCs who will invest without a lot of proof of market. So naturally, for step one, you're trying to get angel investors to get the business going. And you're trying to, at that point, do as much proof point as possible. So if you're selling an actual product, try to do something like a Kickstarter or try to do something pre-sale that you push the market out there to get the statistics, to get some metrics under your belt, right? And I always encourage entrepreneurs, even if the products are not 100% perfect yet, still, if it's a 95%, push it out to market to get feedback. And from there, you can get, like, for example, you will learn for example, is a product. What's your CAC LTV? Is it like, are you spending more in marketing than the actual sales? You can get a better sense of your product margin, get a better sense of who audience would buy it. So it's very important to get, I guess, like maybe the initial pot of money, and it's typically more angel investors or maybe more of these smaller alumni groups or angel groups that will seed the capital, and then do some test runs before talking to a big VC, like more institutional money. I don't want to call it big VCs, but more like a fund itself. Yeah, so this is the point about proof points. Is a lot more compelling when you go in to say, I have done some pre-sale, or I have launched in Kickstarter and it's sold out, or like I have done a 50 units run and this is what I've learned, and I believe that once I get the money, I can scale it and I can get this profitability, and that's why I need to get this. I'm raising money right now. Just having a concept is not good. And also the proof points is also make sure you have the right metrics. I think is going into a pitch without knowing the metrics of your business is also a very it's just not very encouraging from an investor's point of view. Like, and you know what the business you have, but the metrics typically is kind of what is the CAC LTV, like if it is a gaming, what is the download, what is a playable, what is a payable wallets. So make sure you really know your numbers going in front of the VCs. And then the concerns and address objections proactively. So I can give you one example. I was recently advising on a hardware startup. It is a smart garage door open sensor to sense some like high-end luxury cars right now has certain bumpers that the old style garage sensor cannot detect. So a bunch of like very high-end engineers from Lockheed Martin created this garage door opener, and they did a test run, sold out on Amazon. And they started pitching to different angel groups across the country. And I'll be quick. And the they did a very good job prepping the objections. And one of the question is your supply chain, right? What is your IP, your costing, and how do you defend against any tariffs? So those are questions that is, I feel like any kind of like any companies building or any entrepreneur building a product should have those basic questions down pat, right? The answers to that, as well as metrics to the business. And it's not just about finance. Finance is actually more secondary in a sense of your cash flow. Just make sure that you can have cash flow to cover like at least 12 months of runway. I think the more important question from the pre-seed C stage is that you know your stuff enough that you can go and raise money, you can build a business. Yeah, and here, I guess like from an entrepreneur point of view, how do you pick the right VC, a right investor? And I mentioned that a little bit before, is to see what type of fund it is, if it is pre-seed stage fund, how big a check they will write, what kind of network they will provide, if they have a similar investments. Because if they have made similar investments, you may run into a competitive situation where the VCs would not fund. But see, like if they have like kind of adjacent or different brands that you guys aspire to for the project or for your business, and they might be able to bring in other resources, such as like supply chain network or advice to like marketing. And that could be a lot of resources that is very beneficial in addition to the capital they provide. Also, knowing who their LPs are is also very important, because they can also pull in the LPs to help if they find the project compelling. For example, Mark Cuban is one of my funds VCs. And there are a lot of times when the portfolio company is interesting, we will talk to Mark and say, hey, do you want to look at this project? And, you know, whether it is for your, whether it is for it like, for bring it to your network, or for just advertising, or just find ways, because he does a lot of consumer brands.
Renee, we have a question. Is it ever a flag of a potential conflict of interest? How to assess?
Say that again, sorry.
The way it's written is it ever a flag of a potential conflict of interest? How to assess when a VC is invested in similar companies?
Yeah, typically VCs would say they might, typically they do not prefer investing in two companies in the same space. So if they, let's say, I guess in a beverage, if they invested in Poppi, they might not invest in another drink that have, you know, digestive or whatever benefits they have. They are because they don't want to have that conflicts of interest.
And I guess the second part of the question was how do you assess that? So is it that they have like similar companies like yours in their portfolio? How does that?
Yeah,
Okay.
you can clearly see who the companies who they have invested.
Excellent. Thanks, Renee. Thanks,
Yeah.
Candace, for posting the question. William, you can continue.
Yeah. So perfect. So that's the setup in terms of what investors are looking for and how you can position yourself for, you know, again, maximum success by doing your homework ahead of time, like Renee was mentioning. And now what we want to do is switch over to, now we're ready to, you know, go to market, if you will. What do we need to do in terms of putting the information together that an investor is going to want to look at? And so Kim's going to take over from here on what are the materials that are needed and how do we put together the best possible pitch.
Hi. So when we're ready and after everything that Renee referred to, you're comfortable with, right? Essentially, we're going to start pulling together the materials we need to be able to pitch to a potential investor. So the first thing that we essentially start with is the financial basics. Now, I know I hear a lot of times, a lot of people shy away from the numbers. They say, I let my accountant handle that or my CFO. The key is you really need to know some of your key numbers, because they need to hear it from the CEO or the founders in terms of that you understand the economics of your business, you understand what levers impact your business and what drivers are impacting your business. So as Renee said earlier, a lot of your materials need to be around almost a sales pitch. Do you have a prototype? Does it work? Is it making money? Is it a volume play where you have to put more volume through the system? Or is this something that you build as you go? Right? But whatever the story is for your business, whatever the sales pitch is for your business, the financials need to basically support that story. So essentially, we talked about this the last time, but I want to reiterate that key performance indicators are really critical. And those should center around your specific business. So some of them are very standard, like revenue growth, net income growth, basically gross profit and so forth, but other ones are specific to your industry, right? So what are the levers and what are the drivers that are driving your business? How does your business scale? And what does it take to scale that business? The other thing I wanted to mention too is as we're putting together the financials, especially when you're raising capital, investors don't typically like to see that you're raising capital to run operations. They want to know, what are you going to grow? What are you going to build? So usually we position the story to be able to tell that we're putting a good amount of money into, whether it be sales, advertising, marketing, whatever drives your business. And then what are we building and what is that going to give us going forward in terms of profitability? Those data points all need to be connected as we go forward and develop the pitch deck. So if you can move forward, that would be great. Now, another thing I just wanted to mention about a pitch deck is there's really two components to the financials, right? The first is your GAAP related financials. The second is essentially your cash runway. So when you're a startup, unless you're profitable right out of the box, which most of them are not, an investor really wants to take a look at, if you raise this capital, how far is that going to get you and what is that going to get you? Or when is profitability going to be reached? When is cash flow positivity going to be reached? These are all key data points essentially that you want to be able to have when you're giving your pitch deck and be able to present that so that because you will be asked those type of questions. You'll be asked about your metrics. You'll be asked about your cash runway. You'll be asked about how many months that cash runway gives us. And you'll be asked, what are we going to spend this money on? And if the answer is operations, usually investors don't really appreciate that. So it really has to be crafted around the story that you're telling, what you're building, and what you're going to drive out of this money that you raise, such that you'll bring hopefully the company to profitability and so forth. If you want to move to the next slide. Okay, so deck architecture. Essentially, we start out usually with our deck. You start out with your story. As Renee alluded to earlier, why you? What's your value proposition? Are you making a process much better and you're the leader in that space because no one's done that? Or are you developing a new product that hopefully will replace an existing product, right? But why is yours so much better? Why would we invest in this company? What is your value proposition? It almost needs to be like a sales pitch. The second component that's really very helpful is that if you do have a working model, so as Renee had mentioned earlier, if you have clients already on your platform, so you've signed contracts with a client, those are really good data points to have in your pitch deck. If you basically have some volume and you're starting to see some growth and the model, whatever your business model is, works, you want to highlight that in there, right? Because investors like to see traction. So ideally what you'd like to have going is, once you get started, if you have a customer or two where you're making money, to be able to demonstrate that, right? And show then if I put more volume into the system, what that will do, if I sell more product, what that will do, and how scalable this business truly is. Your pitch deck needs to be crafted with your brand in mind, right? So depending upon what your brand is, you usually set the deck accordingly. So like my gaming companies, they'll use a lot of fun colors and fancy, graphics and so forth. My more traditional type of companies tend to be more standard because they tend to be more serious type of company, and they tend to use different types of, darker colors and so forth. So essentially your pitch deck needs to reflect basically the brand that you are and really trail throughout the pitch deck. Every single slide needs to have a clear message, and it needs to be concise, right? Anything that gets overly complicated, like I just recently did one, and the revenue is incredibly complicated on that client. So we really broke the revenue down into pieces so that they could completely understand how we're monetizing this client, how we're making revenue and generating it. Because I find that if you complicate things too much, investors tend to turn away. So you need to be able to chunk it down into understandable categories. And then essentially you have to have every essential slide in the deck that I'm just going to walk you through next. Okay, so these are really the 12 essential slides that you want. Now, every business is different, so you might need to pull in a few extra slides. But essentially, as I mentioned, number one, value proposition. Why you? Why are you better than anyone else? Number two, what is your solution? What are you making better? What are you improving upon? What are you solving? In many cases, you're solving a problem, or you're using technology to solve a problem. Whatever the case may be, you want to be able to highlight that. Competition. What is your competition? Do you have any competition? Are you new to the market space? And if so, are you creating a market, or do you have competitors in that space? And if you do have competitors in that space, where do you stand? And what is your objective? Do you want to be the leader in the industry? Are we looking to surpass the leaders? Or are we just looking to improve this process and grow? Business model, really important. And this basically encompasses a few factors. What is basically your business about? How do you anticipate growing that business? What are your products and how are you building those products? What is your trajectory? What do you need to add to that business to basically make it to grow? Is it something that's completely scalable and we're just throwing in a lot of volume, or do you need to build teams as you go? How does the business actually work? Right? And then how are we actually going to monetize that business, and what are the costs needed to support it? So moving into the financial projections, that's something that typically, and I think I mentioned this on last call, we typically look 3 to 5 years forward. Most of my clients look 3 years forward. And those are really solid financial projections that put together exactly what you think you're going to do for your business from a financial perspective moving forward, not only from a GAAP standpoint, a GAAP financial statement standpoint, but also from cash flow. So what does my cash flow look like? And then what are the metrics for each one of those years that you're projecting for? What are the drivers? What is the volume of clients that you need, and what is the volume of products that you need to sell? What are some of additional costs that I need to add in, and why? Right? Do I need to add more salespeople? And if so, why? Do I understand why I'm adding a salesperson? Right? So having the metrics behind that is really critically important. You also want to include a component about risk. What are the risks in the market? Every single industry has different risks, right? So you talk in retail these days, everybody's worried about tariffs, right? Manufacturing, everybody's worried about tariffs. You go to the South side, everybody's dealing with sales tax and things like it, right? Like, so it really depends, like what essentially are the risks in the industry that you are in, right? And then how are you going to mitigate those risks, or what have you done to mitigate those risks is really very important. Your team is incredibly important. So having the right people in place, and this does not necessarily mean they have to be employees, but you do have to have the right people in the right seats. So they can be contractors. Mentioned to you earlier, Artifact was one of my clients. I was a contractor to the day we sold it, right? I was their CFO to the day we sold it. But essentially, you need to outline that team. What is the strengths of your team? What are basically, who do you have in the top seats in your team, and what are they contributing to the overall company? What is their background? What is their credentials? What's your go-to-market strategy? That's a critical component as well. So how do you plan on entering the market if you haven't done so already? And then how do you plan on expanding in the market, right? So do you have multiple channels you plan on expanding to, or are you just going to focus on scaling one channel, or how are you going to go about distributing essentially your product? And what is your go-to-market strategy? How are you going to get there? Technology and processes, how systematized are you? What technology are you using in your company? If you're a SaaS company, technology is a heavy component. If you're a crypto company, same thing. So you need to really lean in on technology. If you're not one of those companies, you still need to present in terms of how efficient your company is in terms of their tech stack, so to speak. And then any traction you've gotten. So I mentioned this earlier, but if you've got contracts signed and clients coming on board, investors love to see that. If you already have volume, you can talk about that, right? That's a really good data point to say, guess what? I did a test on an app that I have, and I got, 100 people to sign up. That's a really good data point, basically, for you to have. So any kind of traction you've gotten actually lends much more credibility to your organization. Any kind of deals that have been offered, and then why are you raising right now? Right? Why are you raising capital right now? And then what do you plan on doing with that capital? And in particular, what is it going to bring back to the investors? So if I was going to invest in your company, what does that bring to me in 3 or 4 years from now? What are the plans for growth and how are you going to get there?
Kim, we have a few questions here that we probably want to address before we move on. So Michael posted, you mentioned capital for sales and marketing, but what about optimization to improve efficiency and profitability?
Optimization to improve profitability is good. I'd start with growth and, build any kind of building that you're doing. So building out the product itself. And then you can also speak a bit about optimization. But from my experience, I find investors love focusing on growth and love focusing on really how well the product is developing. You can absolutely say working on efficiencies is important too, but you'd probably want to capture those other two components as well.
Okay, next question. Thank you, Kim. What are your thoughts on the opinion that founders should not include their finances in their send-along pitch deck, and that they should be there to defend their numbers, so only include decks that they are presenting?
Are you talking about personal finances?
I believe they probably mentioned referring to business. No, I guess business financials, projections.
Yeah, so the founder needs to be able to speak about the projections, even if they have a CFO in the room. And the reason being is, and I always say this, and it's kind of very simplistic, but think Shark Tank. The CEOs who know their numbers tend to get funded much faster than the ones who fumble around, right? And the reason for that is you work with your CFO to understand your numbers. You need to be able to articulate against it, even if the CFO is there, because they want to understand that you understand the metrics driving your business.
So Kim, the question is about the deck that gets mailed to the email to the investor, and whether or not financials should be in that deck versus presenting live on Zoom or whatever.
Oh, got you. Yes. So usually, and I think we have a slide in here that I can show you in just a bit, but usually we do include a summary slide. So for a pitch deck, you wouldn't include the full-blown, very detailed financials, but essentially we do recommend summary financials, which I think in a few slides I'll be able to show you. But essentially, that is something that is always included in the pitch deck.
Okay, and the last one is sales included in operations?
So no, so usually the way it sections off is sales is cost of sales. Okay, so any kind of sales, marketing, advertising, cost of sales. Operations is more of your support people, any kind of operational processes you have and so forth. And then we typically will break out tech as well, especially if a company is heavy tech component or heavily tech driven, we break those costs out as well. Okay.
Fine.
So no problem. So just a few things here. This is just an example of bad deck versus good deck. But essentially, the key things you want to have in your deck is it needs to be very understandable for the reader picking it up. So like I mentioned earlier, if you have complex revenue, it needs to basically be spelled out in a simple form. You want to make it nice, neat, presentable, and pictures are always good, right? So any kind of charts, pictures that you can use are basically really good to help demonstrate what you want to demonstrate. They need to be consistent in terms of every single page. So as I mentioned earlier, you want to make sure that it's consistent with your colors, your logo, your value proposition, right? In terms of headers and so forth. And you want it to look very professional. Okay, so like in the Good Deck example here, they have a chart, they have a call out at the top of the page that basically says what they're seeking, right? And then supporting data below it. So essentially you want to have that nice, concise deck, like approximately 12 to 15 slides, but you want it to be very clear, very crisp, and very readable by the users so they understand specifically what you're trying to do, they understand about your product or service, and they can really glean the information that they need from that deck. Okay, so here's a sample market positioning slide. So this is an example of competitive overview, right? So essentially, this is a simple slide that basically shows here's all my competitors, right? And where they land on the spectrum. And this is essentially the market that I'm going to address, right? Shows that you understand the overall market itself, who's sitting in that market space and where we basically land in that market space, and then how we're going to penetrate that market space and why a consumer would select you over somebody else. This is another example of a slide, and this goes to the question about the financials. So as you can see here, these are not incredibly detailed financial statements, but they're summary financial statements, and they give good enough detail for the investor to be able to take a look and understand exactly what's going on the company. So this is an example of a SaaS company, but basically it's giving 4 years worth of projections. I know they're older years, but they're 4 years worth of projections, and essentially they're showing not only the GAAP metrics, as you can see here on the left-hand side, right? And then the key major components of expense, but they're also showing then the cash metrics as well, because in startups, investors are usually very concerned about cash, right? And what that new cash is going to drive for you. Things like cash burn, things like growth and so forth are standard. These are things that you'd want to show in terms of like your revenue, cost of goods sold, gross profit, major expense categories, and then your net income, and then the cash metrics behind it. And then as you can see on the bottom part of the screen, we have our milestones there. So anything we've attained so far. And then on the right side, we typically have a few slides. It could be revenue focus, account receivable focus. It really depends upon what's driving your business. But you'll have a few charts that basically demonstrate the trajectory as well.
Another question we have, Kim, what % of funding do you usually expect or suggest a founder should set aside for marketing?
It depends on the business. So I've got some businesses that put very little into marketing and a lot in sales, right? And the one hesitation I have on marketing is you have to find the right type of marketing channel to do it in, right? Otherwise you end up spending a ton of money for nothing. So it really depends on the business, the size of the business. And if it's a driver, right? If let's, for example, say advertising on Google is a driver, like I have an app company, right? So they use Google advertising and Instagram advertising and so forth. So for them, it's basically a real critical component of their business. So they might spend 20% of their total spend on advertising because it's driving a lot of revenue for them. Other businesses will put money into sales. And so that's where you want to highlight. If you have salespeople that actually go out and sign contracts, then we would highlight the salespeople there as well. So it really depends on the type of business and what you're trying to achieve. But depending on the business, it could be a large component. But typically it lands in sales or advertising.
All right, thank you.
Kim, do you want to talk about the additional materials?
Oh, yes, I'm sorry. So supplementary materials for the deck. Okay, so a few other things that you want to have available, and you typically have what's called a data room when you start to have investors, right? So you have your financials in there, your pitch deck, and so forth. There's usually a summary document that's basically put together that basically outlines just the summary of the company. And then in many cases, founders will quarterly do like a quarterly update summary that essentially outlines all of their accomplishments that they've done over the past quarter. So if you have any of that type of documentation, that's always good to basically have as part of as part of this exercise. If you have any kind of marketing materials, right? So a lot of companies I work with, they have a lot of nice marketing materials on how they sell to their customers, what their value proposition is, and so forth. If you have that available, that's always very important. Your financial package. So as I mentioned in the deck itself, I just showed the summary financials, but typically in your data room, you would have more detailed financials. So those expense categories are typically broken out. You show every month over basically 3 years, and the financial package is usually in there, plus any kind of actual results we usually also include. Investors like to see where you've been and then where you're going. Due diligence data room, right? So other things to put in there, if you've got signed contracts, if you've got business already and so forth, any kind of key accomplishments, those are things that are really valuable in a data room. And then any kind of research you might have. So if you've researched the marketplace, if you have research around your product, or if you have, I have certain clients that actually will IP their stuff, any of that type of activity is also very good to put into the data room as well.
Awesome.
Okay, then there's also, so when you're putting your pitch deck together, there's a lot of tools that you can use. Now, I always tell people tools are great, but you also want to make sure you look at everything and that you have a really good eye on this stuff, right? Because the tools are going to spit some information out. And I've seen that happen before, and then people don't really look at it or understand it, right? So you really, if you're using a tool, you want to make sure that essentially what's coming out of that tool, you can actively understand, speak about, review the results and so forth, right? So there are pitch deck creation tools, financial modeling software, and so forth that you can use. If you use somewhere like something like Carta, basically for your share maintenance, you can also build like a data room in there. Or a lot of places will actually just use a Google Drive and so forth to put together a data room, right? So there's definitely software that you can use for many of these activities. As I mentioned, Carta is a great software that we use for investors and investor relationship management. But once again, you just want to make sure you review everything appropriately in order to make sure that everything that's coming out of the tool is good and that you can speak about whatever is coming out of that tool.
Perfect. All right. So the key takeaways: make sure you understand who you're pitching to and get some information from them about them ahead of time so that you can craft your pitch accordingly. Customize your pitch to the audience is critical. Make sure you have the story, you understand the business model, you're passionate about your business, of course, but you understand how to translate that into what the investor wants to hear in terms of how are you going to deploy that capital for growth. Have professional materials for the various pieces, the financial model, the summary, executive summary, the pitch deck itself. Understand what due diligence is and what people are going to be looking for, and have all that material ready to go. And practice your delivery, practice your pitch. There's lots of people available to help you. So take advantage of the fourth effect and people there, and then demonstrate credibility that you've done this, you understand your business. Investors love to hear from the CEOs directly about their story and the why and the traction that they had so far, and why their money is going to make your business really take off. So you built a rocket ship, but you need fuel for it, and that's what the investor dollars will help do. I think we had one more quick poll. Are you interested in a pre-pitch assessment? This is what we offer. So if anybody on the call is interested, just let us know. You can respond in the poll or in the chat. Mercedes will capture that, and you'll get on a call with me, and I'll run through what your specific situation is and your business model, and your readiness to go out looking for money. So happy to do that, no charge for the folks on the call. And then last but not least, we have several resources. So we'll send out this deck. We have a sample executive summary and pitch deck that goes with it for a client we've done in the past, due diligence checklist. There's some great pitch deck templates. So the links to that are in this deck. And again, practice opportunities, give me a call, shoot me an email, and we'll do that for you, no charge. And again, there's lots of resources at the Fourth Effect available to you for advisors and other resources that you can tap as a member of the Fourth Effect. The last one, as we mentioned, there's a third in the series next month. So that'll be all about executing and negotiating the deal and deal terms and what is necessary to really successfully close a deal, right? There's one thing to get people interested in your story, but it's another thing to actually close and sign on the dotted line a deal that's good for you. So that's what's coming up next month.
Well, thank you. Thank you for that. And thank you for this, this whole session. And I know I just saw a question in the chat about how do we find the deck? And I think Kat is responding to that. And also everyone in the Fourth Effect, these recordings, materials, we're sharing everything. So don't worry. Yeah, so I guess last thing I would just mention is if you're on this call and you are not a female founder, don't worry, you're still totally welcome and invited to come on May 22nd. And to hear the final part of this series. So this has been incredibly helpful. The resources are so meaty. What a generous offer. Thank you. And really perfect timing as well. You fit in so much, and we're 30 seconds under the hour. So well done. Thank you, everyone. Hopefully we'll see you at part 3.